Good morning, everybody. Welcome to the Flow Show. It's Friday. We're nearly at the weekend. Made it through a, well, I'd not say a busy week, but the last couple of days haven't been so good. No K-Man today, just me and myself to guide you through this morning. So we shall get stuck right into it. Quick look at good old China. And they fixed their reference rate at 7.1151. So that was below the 7.1212 they fixed yesterday. So they're still giving the indication that they're happy to let this move continue and indeed want it to continue. So for now, they're not putting any brakes on officially, although the price action just seems to be going a bit sideways for now. So waiting for the next decision to be made in that pair. We've had a bit of data out overnight. Find it coming in from Japan. Well, we had a bit of data out of New Zealand as well. Retail sales, quarterly numbers, not looking overly impressive. Flat on the quarter. And down again 3.4% year on year. So not too good there. CPI in Japan. Now, it missed expectations in most counts, as you can see there. One of the core numbers coming in at 2.9 versus 3 expected. Headline CPI 3.3 versus 3.4 expected, but both those measures were higher than last month, which is the main take from that. The core number, as they call it, which is the ex-fresh food and energy, came in a little softer at 4%, was expected at 4.1%. Last month was 4.2%, so a little bit softer there. But overall, we are not yet seeing the easing in inflation that the Bank of Japan had told us were coming in the latter part of the fiscal year. So not seeing that at all. So if this drags out and we get those wage rises in play next year, then I think the touch paper will be lit for the BOJ to start tightening policy. Looking at some of the other data, excuse me, just some PMI data from Japan, pretty much echoing what we've seen in a lot of places. Manufacturing still in the doldrums, worse off this month, 48.1, although services ticked up a pip, 51.7. So seeing that divergence between services and manufacturing in play there. Some PPI data and GDP data. Germany final numbers for Q3 confirming the minus print 0.1% GDP there, although it did come in a little worse on the year in that revision. Spain PPI coming in a negative number there. It doesn't show the month on month, but that came in at minus 1.5% versus a previous plus 1.5%. So still negative numbers coming in from the PPI stuff there. Another little improvement in one of the business surveys in Germany, the IFO, that saw business climate number rising to 87.3, not as much as expected, but a move up over last month. Pretty much similar for the current conditions and expectations. Moving up, not quite matching expectations, but still upward numbers there. So some signs of life in Germany, at least. None of these numbers are still healthy. They're just less crap than they were before. On the central bank front, we've had BOE's Peel saying that we must hold firm in the battle against inflation, and that's his biggest worry, that inflation isn't coming down fast enough, and therefore they cannot rule out further rate hikes, and they'll be keeping rates higher for longer. After the PMI data yesterday, interest rate swaps for the BOE pushed back fully priced rate cut until September. As we've been mentioning this week, these things are going to jump around as per the data does. On to the ECB, and ECB's McClough says we can't rule out another rate hike, and it's too early to discuss cutting rates, though says we are near the top of the hiking ladder. ECB's Nagel seems to be leading the charge of who can speak the most this week. Says that the ECB is still facing the most difficult part of the inflation fight, and it would be a mistake to loosen policy too early. ECB's Wunsch says the base case is that no more rate hikes are needed, but we can wait until spring to make that call. Someone wants to go on holiday for a few weeks over Christmas, it seems. ECB's Vilroy says the ECB won't raise rates again, except in any surprise circumstance. I might timestamp that one, and we'll refer back to it if and when they do hike. ECB's Hawke Holtzman says there's an equal probability of higher rates as there is a cut. So sitting firmly on the fence with that one. ECB's Lagarde is currently waffling on in a fetching red outfit. Looks a bit like Michael Jackson from Thriller, but she's not been saying too much. I've already switched it off because it's bored me to tears. But the key comments so far have been that the battle against inflation is not over, and the ECB is not declaring victory in the inflation battle, though we are seeing progress. She said, we've already done a lot of rates, and now we can sit back and observe. ECB minutes were out yesterday, not too much to stir the pot from those. Some members argued that they need to keep the door open for possible future hikes, which obviously they're going to do. But the generalised discussion was that further hikes are not part of the current baseline scenario. A discussion of early termination of PEP reinvestments at that current meeting was seen as premature, so something to look forward to. Probably we'll hear about all this stuff next year. Germany, their finance minister or ministry suspended the debt brake and said it doesn't mean that there's going to be new debt. This is all part and parcel of the stuff going on over there. Suspending the debt brake, or the debt brake was something where they would not borrow above existing obligations or needs. So the suspension of that does mean that they can borrow more above their current limits should they need to. That's as a consequence of that Constitutional Court ruling on those COVID funds or relief funds that they wanted to move over to green policies. But the Finance Ministry strongly coming out to say that it doesn't mean there will be new debt. It just means they've got the door open to do so if needed. Right, you guys and girls need to help me out this morning. You're all a bit quiet in the comments, so give me something to talk about, because there's not an awful lot going on as might be expected. Obviously, with the US shut yesterday, and they're on half day again today, it seems like a lot of the market are putting its feet up and happy to take a little bit of a break and a pause. So not too much going on around the grounds. Euro dollar, as you can see there, pretty tight range, pretty much asleep between the levels. We do have some US data a bit today. We have the PMI data coming out. Also, we have some Canadian data, retail sales there, so that might give the loonie something to watch. Manufacturing in the US is expected to come in just below the magic 50 level, 49.8. So if it doesn't drop there, or if it stays, goes above 50, moves further above 50, that'll be maybe a little bit of surprise, should give the dollar a little bit of an injection. Services expected to lose 2 pips to 50.4. Again, this is becoming the bigger and bigger part of most economies now. So this is probably going to be the bigger swinger here. If it dips under that 49 level, then we're going to see those rate cut expectations picking up a bit, probably seeing yields dip and the dollar dip. But if it stays there or thereabouts, I think we're going to go to sleep this afternoon as well. So just coming back to some of the prices, dollar yen didn't really do anything over the CPI numbers. Though, as I say, it does keep the pressure on the Bank of Japan to look for the exit door. Those numbers continue. I think we're over a year, or we're just about a year of seeing prices, inflation above the Bank of Japan's target. I mean, how long they want to wait before they call it a trend is anyone's guess. This is Japan. They can call it thus for the next 20 years if they decide, but not really seeing anything in the price moves on that. This one, we're just starting to build higher lows now, so the dips are becoming a bit more shallow. We might be getting back on the grind again, although there does seem to be some decent selling up in the 149.70s for now. Can't take too much of that to heart, obviously with the US closed as well. US yields, they opened up last night on Globex a bit higher, and there was not really any reaction in markets to that as well. We're still holding below this 4.5 level, which is looking a bit pivotal at the moment. We have bounced off support down around these prior highs, broken highs. That's where support's come in, 436, 37-ish. So a bit of a battleground going on between there and 450. Probably going to have to see the dollar moving on a break of either side of that. So take your cues from yields. If they start breaking one side or the other, then we might get a bit more of a stronger move in the dollar. Otherwise, we're treading water a bit. This might also be key for dollar yen, having a look at 150, maybe even going through that if we get above 450. So something to watch anyway for the early part today and over that data, just to see if we get any moves around those levels for that one. Pound yen looks like it's trying to head past the high at 188, says Gavin. Let's have a look at good old Guppy. If I can find it on my chart. There we go. Yeah, so it's keeping up to these highs. It's a little bit wishy-washy against the former highs. You'd want it to start holding this to give you a clear indication of a break. You know, it was quite a significant top over the last few months, so might be getting a bit of a signal that we're going to start holding above it just with this moves, this support coming in at around about 30s. It's just coming to a bit of a shorter term chart. Let's go on the hourly. But yep, still looking fairly bullish is this one. Other yen pairs as well, not quite creeping back up towards the highs, but it's all a similar picture. We've had a dip and now we're having a little bit of a grind up. But Guppy, yeah, you want a real solid hold down here into this 186 level. Get that, it should give it the springboard to take it above the prior highs. As I always say with prices, you know, people like to try and pick tops and stuff. Keep an eye on just this move over the next couple of sessions. If we can't get above that high, even by a few pips, you know, 5, 10, 15 pips, then you've potentially got a bit more of a solid top in play. And that's when shorts can maybe look to get in on something. But if you just nick a new high, as I say, 10, 15 pips, it keeps the move going. Then you're more likely to try buying the dips or even looking for a potential break and then seeing this high becoming a top. But obviously keep an eye on what the rest of the yen pairs are doing. Gav's not in a position though. And what would you look to do on this one, Gav? Short it up here or looking to get on a dip for a long and run it higher? Just give me let us know in those comments there. Euro sterling continues to look on the downside. We're now crunching through this 86.90, so looking a bit more bearish intraday or short term than it has done. Now we're going to see if it starts holding below 87, 86.90. If we get that, again, let's have a look at the shorter time frame. Not quite getting it just yet, but if we start to find resistance coming in here, then that suggests we're going to get potentially deeper pullback, maybe back into the zone, maybe a test down to 86.5, that sort of area. It does seem after this week seem to be a bit more positivity in the quid than there has been. You know, that PMI doing a lot of the work, I think, from that, plus the autumn statement not holding any horrors and sounding positive for businesses and investment. So maybe we'll see a little phase of pound strength coming in. again, all it takes is one bit of data to flip the other way, and then the tune changes again. But just for now, in the short term, the force is with the quid at the moment. So just keep an eye on those intraday trends. It just gives you an idea how to trade them. Gavin looking to go either way on that one. Good stuff, mate. Nice to see a bit of objectivity. Just trade the levels, eh? Morning, Giuseppe. You're greeting us on Black Friday. Yeah, any good sales going on? What I would say is, for those of you who use Trading View at all, they've obviously got a Black Friday sale on. And I'll just get you a quick link because we have an affiliate deal with Trading View. And if you haven't had an account before and want to sign up for that, then if you do so via our link, then you can grab also some free time on the ForexAnalytix platform as part of that affiliate deal. And I'll pop that link in there for you. Oh, no, I won't. Give me 1 second. Oh, I lost it. Where are we? Oh, I can't even copy a link these days. Let's just try that again. There we go. Click, 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 click. There we go. So if you haven't, this is only they've got very tight rules for this. So if you haven't had an account before, free or otherwise, then you can use that link. But the terms and conditions on that, and you can get yourself some free time on the ForexAnalytix platform, depending on which platform which subscription you go for. Anyway, moving on. Not a lot to talk about really. In a lot of pairs, Aussie dollar still sitting in between the levels, down into 65.20s, 65, up into the high 65s, sitting a bit in the middle. Kiwi. So the Kiwi also sitting up there as well. Those retail sales not doing an awful lot on the data front. We are just holding below this 60 area, which has been a bit of an on-off support resistance area. Maybe call it a bit of a zone down to the 50s, perhaps. It's not making a definitive break. So although it's maintaining this push, it really needs to get through here and hold through 60, then take out the prior high, and then we're heading a bit higher perhaps, but it's not looking overly as strong as the Aussie dollar is at the moment. It's looking like it might want to have a little break up through the 50 fib on that one. Let's have a look. Anyone else got anything? Come on, guys. Help me out here. I know it's a bit quiet, but you guys and girls must be looking at something. Thank you, Giuseppe. The best nuggets are here in the flow. Of course they are. Dollar CAD. So it survived that test down 136.50. Showing up again as a bit of a line. It's been a bit on off, but as you can see, it's a bit pivotal. When it holds, and it holds quite well. So this one again, quieter markets over the data. If retail sales are a bit stronger, if we test that level and hold it, might give us something to have a nibble on. This is probably one I'm going to be looking at to trade later on, just purely because there's nothing else going on really, and Canada's going to be open, so might as well look where the opportunities lie at the moment, even if they're few and far between this morning. So yeah, that one I'll be looking at top side. It's got to probably go some to get a move up to these prior highs. But if we get a move up there, up towards 70s, 80s on the retail sales, again, if it's nothing game changing, might be worth just looking at to trade the edges. That's what I'll be doing, but not a lot to do otherwise. Let's have a look what else is going on. Dollar MEX, I was looking at that this morning. That's looking fairly interesting. Just coming back down towards this support area. We've had a test previously earlier this week, but the bounce has looked very weak thus far. Inflation still proving sticky in Mexico as well, despite them being on pause, and even sort of indicating that the next move in rates might be down. The data might suggest otherwise, but definitely looking weak on the bounces at the moment. So keep an eye on that one. If we get a test down to these levels, 17, 16.98, if it holds again down there, might get a bit more of a bounce up, but also be wary of a break. The fact that this bounce does look very weak, a quick test back down here might suggest we're going through it. And then maybe we get a move down to the prior lows, which will be interesting. No need for carry traders to get out of this one yet, even with the Fed now on pause and potential rate cuts coming next year. That's next year for carry traders. You're still earning a decent whack on this one. So no real surprise that we haven't seen a turnaround, because obviously this has gone a bit the opposite way to what the dollar's done elsewhere. So it's a bit of inverted trade, if you like, inverted dollar trade, if you like. Probably when they get steep into rate cuts, this is when you'll see some of the carry traders perhaps getting out again and maybe a push up towards the 1850s. But the trend that's been in play, again, my marker is always the fibs, and this one's been best part of 2 years now, and we couldn't even get up to the 38.2. So the trend, as you can see, if you can't break the trend remains in play. So maybe this might be one to look at for the latter part of the year, new year. Maybe we get a break and the carry traders have a last hurrah before they decide to get out of that one. Dollar Swiss. Let's have a quick butchers on that one. Gavin's looking for 87.95 for a bit of a bounce. Well, again, there's a bit of a zone in here at the moment. We've got support right around current price, 88.20.30, and that goes down 87.50, 60 as well. What have you got around 87.95, Gavin? You probably put it up in the chat room and I've missed it, but you got a trend line or something down there. But it looks to me right now we're sitting on support here. Let's come in a bit shorter, see what's going on. Walking that line down at 88.20s pretty tightly for now. As you can see, it's been a former support and resistance area, and then it's a bit noisy underneath down to around sort of 87, 60, 50, that sort of area. So I'll be careful, 87.95. I'll be worried if you get a break here, you might get a little bit of a blow through there. It's a bit tight, but again, a day like today, low liquidity, you might just knock through there and find a big figure holding up as a bit of support, as big figures tend to do on that one. Right. Oh, as I said, not a lot going on today at all. I'm struggling to keep you lot entertained. Don't make me sing. I'm not Dale, okay? Don't catch me sing. I've got a voice for the football terraces, not for anything else, not for the theatres or anything like that. Quick look at cable. As we said, cable, the pound general, just keeping its bid bias at the moment. Same, pretty similar view on this one to Guppy. You want to see the high taken out for a push up to at least 126. But if you can't do that, then it might suggest a bit of a stronger top forming, and then we might get a deeper dip. As always with days like today, we're going to get a little bit of an injection when the US comes in. There's not going to be a lot of people at the desk. A lot of people take this day as a long weekend, but we might get a little bit of liquidity injection, and then after the data, it all dissipates again. So just watch out for any little funky moves. If you get any sudden spikes, something out of kilter that looks like a low liquidity move, that can often be worth a bit of a fade. As long as you keep it small and tight, don't go out on a limb. And sometimes you get an outlier move that you can just jump on. Apart from that, I've got nothing else, and you guys and girls have been dreadful helping me today. Apart from Gavin, he's been all right. Gavin gets a gold star today. Oh, look, he's popped up. EU or Aussie, Euro Aussie. I know a lot of you guys and girls like that. Like looking at this one. Oh, where's all my stuff gone? Oh, look at that. Oh, there we go. Haven't got a lot on this one. he's watching 166.50. Yeah, a little bit of an intraday level, probably between there and the big figure at the moment. Again, walking a line, big figures. That's what they do. People park their bids around it, or offers around it, depends what side you're on. But this one, this again looks of just low liquidity, not doing anything. Got a bit of a range, 166.50, 166. Be careful looking at breaks down there. If you do get a break, then you'd be looking at down around these levels, 165.70. So, 20, 30 pips maybe. Possibly good for a scalp. But we have got a little bit of a downtrend going on for the past few days. So, if you do break, you might be something you can just sit on and push and see where it wants to go, short on a break, or wait until it shows as resistance. So a break under 166, find it as resistance, nick a little short and see where it wants to go. But back above 166, 10, 15, and you're probably back in the box. So no need to push the boat out on anything like that. 164.50, yeah, that might be a bit of a target. It's one. If I was trading it that way, I would be, doing the old slice and dice. If you did get a move down, just sit on it, see where it wants to go. If you get 166, 164.50, then all the power to you. But yeah, slice and dice on the way down, and just respect the conditions we've got today. Right, I'm going to call it quits before my voice runs out as well. So have a great weekend, everybody. Have a great rest of your day. If you're disappearing later on, then go and do something more interesting, and have a good one. Thank you, as always, for your valued support today. Please stay safe and have a very peaceful weekend, everybody. And we will see you all on Monday. Have a good one.